Hello, everybody. Good morning, ladies and gentlemen. And how are you all doing this morning? Please help me confirm that you can see my screen and you can hear my voice clearly by typing hi in the comment section so that we can get this started. Hey, Carrie. Good morning. How are you? Okay. So can I get one more confirmation that we are good to go? So that yeah, all good. Oh, that's great. I'm glad to hear that. Okay, Ashitaka, thank you very much. I'm fine. I'm fine. I'm well. Thank you. Wesley 777. Okay, you're welcome. 0921. Hi, how are you? Okay, great. So I guess we should kickstart the party. I welcome you all to yet another promising session of Extreme Speed Life with my humble self, hosted by my humble self, Sharif Daramola. As usual, it's time to fasten your seatbelt as I shall be taking you on a trading journey where we shall be evaluating the financial market using various technical parameters to identify trading opportunities lining up for us during the New York session today. And also, we will be looking at the pairs we deliberated on yesterday, where we shall be looking at how well these pairs are doing so far and what is going to be our plans against this New York session today. So without further ado, let's dive into the chart and let's see what is happening. The first pair we'll be looking at today is the US oil, and remember we've been expecting that bullish momentum yesterday on the US oil, but in the last 24 hours we've been having series of indecision that has gripped the market during the course of yesterday. Now, if we look scale down to the 1 hour time frame to be able to see what has been happening so far on the US oil, you will realize that we've been having emphatic moves, especially during the early hours of the New York session yesterday. We saw those move to the downside. We saw this emphatic move to the downside, and we also saw another huge move back to the upside at this point, giving us an imbalance in the market structure. So now we're still yet to take advantage of any trade on this one. Remember, we had two scenarios we were looking at. We said if we see price break out of the structure, that is this bearish trend line here, and if price comes back to do a retest of structure with reversal pattern on lower time frame, we will join the rally to the upside. That did not happen. And the other scenario is that if we see an outright breakdown of that bullish trend line, that is the one we identified on the daily time frame, and a retest of structure with reversal patterns, we want to join the decline. That too did not happen as we saw price continue to the upside from that point. So what I did here is to remain very patient so that let's see how price is really going to play out in the next couple of hours. Now, if we scale up a little into the 4 hours time frame on the US oil, one thing I observe here, hold on a second, let's go to the daily time frame. So one thing I observe here on the daily time frame is that we have a key level, we have a level rather at the $92 mark, which has been a major determinant of price action as far back as 4 to 5 weeks ago. Now, if we look at the 92 level here, we can see how this area was supported at one point in time. Somewhere around here, it was close to that level as well, and we had this structure around this point. Now, we saw the breakout of this key level during the course of the second week of this month before this bearish move to the downside. And right now, price is right above that bearish trend line we identified on this time frame. Remember, we had this bearish trend line after connecting a series of lower highs since the month of June. And one thing we want to be looking forward to is an outright breakout of that bearish trend line to give us a signal that we are actually going bullish. Now, if we look at the structure that, if we look at the candle, yesterday's candle, we can see we have something like an hammer candle, which is more or less bullish in nature, and that was yesterday. And today, I identify this $92 level to be a comfort zone for us if we are going to be seeing price breaking above that level to take advantage of a bullish momentum here, because of that structure we see here that I identified a couple of minutes ago. Here we saw this level, we saw it all there, we saw it all there. So I want to see how price is going to relate with this $92 level on the lower time frame. I want to see how we're going to be having a reversal pattern, that is price, we see a double top structure around this area that will push price to the downside, or are we going to be having an outright breakout of that structure, after which a retest should give us confirmation to join the rally. So this is what I want to be sharing with you on the higher time frame. So now let's go scale down to the lower time frame, where we want to see what is happening and identify if we are going to be having a trading opportunity here. So right now on the lower time frame, that is on the 1 hour time frame, remember this is the purple line is our $92 level, and we can see that in the last 24 hours we saw our price has rejected that level one point in time in the past, and right now we want to see how price is going to relate with this level. So what I want to be doing here is this. What I want to be waiting for here on the US oil is to see, hold on, is to see if we are going to be seeing a reversal pattern here. It could be your double top structure. It could be your head and shoulder pattern, whatever it is. I want to, if I see a reversal pattern, a breakout of structure on lower time frame with a retest, then we might want to be joining the decline, which to me at this point will likely be a short-term trade, or it could go as far as the key level we identified at the $5 mark. However, if we are going to be taking that bearish momentum, one thing I want to state here is that as soon as price gets to this bullish trend line here, which also shares a confluence with the bearish trend line we identified on the daily time frame, you might want to be asking me, you might be saying that what bullish trend am I talking about? Let's go up to the weekly time frame so that I can share with you what I'm talking about here. So you can see on the weekly time frame, we can see how price has continued to respect this bullish trend line, and right now price is right around that area where we said if we see structures that support bullish momentum from this point, we want to be taking advantage of that bullish trend. So this is the bullish trend line I'm talking about here. So let's go back to the 1 hour time frame. So like I was saying, so this is the bullish trend line here, that's the black line here, and this is the bearish. So if price gets to somewhere around this area, we want to lock in some profit or move our stop loss to break even to protect our position against any sudden pull up at this point, while we wait to see if price is going to go as far as the key level here. And if price moves accordingly, then we should be looking at least a minimum of, let's say, 400 pips, 500 pips to catch here if price moves in that direction. So what I'm saying simply here is this: we want to see how price is going to relate with this $92 level, which we were able to identify on the daily time frame. We want to see how price is going to relate with that level. If we are going to be having a reversal pattern there, then if we see a reversal pattern around this area, we want to be joining the decline at a breakout retest of structure on a lower time frame, like I said. So that is that on the US oil. That's on the for the selling perspective. Now if we join the selling move to the downside, and at any point we get to this bullish trend line and we begin to see multiple rejection of this area, then we want to see this move as an attempt to respect that bullish trend line one more time. Remember, this is the bearish trend line we identified on the daily time frame. Let me show you so that you can see what I'm talking about. we had this bearish trend line on the daily time frame. You can see since on the month of June, we have seen price respected that bearish trend line to the downside. So that's the bearish trend I'm talking about on the daily, on the 1 hour time frame. So that's it here. So if we see price come back into this area with multiple rejections of this level, or probably price come as far as this bullish trend line here, and we see like a double bottom structure, then we could be moving our stop loss to lock in from profit and get ready for a bullish momentum from this point. So that is one scenario for the bullish momentum here on the US oil. Then the second scenario for a bullish momentum here is to wait for an outright breakout of the $92 level. So if we see price break out of this $92 level, remember, we don't get too excited at the sight of that signal. We want to wait for confirmations to happen in the form of a retest of that level. So if we see price come back to do a retest of the $92 level with structures on lower time frames supporting a trend continuation to the upside, then we want to join the rally to the upside. So if we are going to be joining the rally to the upside on the US oil, where will our take profit target be? Well, to get an area for our take profit target on a long-term perspective, it's appropriate that we scale up into the higher time frame. And let's take the daily time frame, for instance, and look at the structure we have here. So what I want to be doing here is to use this impulsive move to the downside, that is this bearish move to the downside, as my yardstick to identify a take profit target zone for our buying position on the US oil. So we have this impulsive move. So what I want to be doing is to bring out my Fibonacci retracement tool, run it through that impulse leg, and we should be aiming at our golden zone area as our take profit target. So our golden zone area is right between the 78.6 and the 50% retracement of the previous impulse leg. So we have something like this. Let's give this a yellow and let's label it our TP target zone. TP target zone for buying opportunities. So this is what we have here now. So we should be aiming at somewhere between the $105 mark and the $116 level as our take profit target, which will be dovetailing to a minimum of, let's say, 1,200 pips to as a maximum of over 2,000 pips to catch here if price moves as expected. So let's keep our mind open and be on standby to take advantage of that move when it finally happens. So that is the scenario we're looking forward to on the US oil. If you have any question whatsoever, feel free to drop your inquiry in the comment section and I will be willing to be of help. So I'll be taking the next 10 to 15 seconds to run through the charts to see if there are any questions whatsoever in that regard. So what do we have here in the chat? Okay, Wesley 77. Okay, you're welcome. 921, hi, how are you? 272, hello. Ramona 85, all right, good morning. Okay, I accept your flowers. A359, good morning. How are you doing today? Okay. 876, hello. All right. Hello, Scott Benji. Long time. How are you doing? Okay, 359. Glad to hear that you're fine. Okay, Ashitaka is asking where is the oil sell target. Well, I shared that perspective here. Let's look at it one more time. So we go back to the 1 hour time frame on the US oil, and what I said here is that if we begin to see multiple rejection of this $92 level here, we see a reversal pattern. Whatever reversal pattern that might be forming A breakdown retest of that structure should give us further confirmation to join the decline. So we are going to be looking at a long-term $85 level. That is the key level we identified on the weekly time frame. Let's go back to the weekly time frame. Let me show you how important that level is. So on the weekly time frame, we have this $85 level. This $85 level, remember how it has held price, supported, resisted in the past. So we are looking at this area as a long-term selling target for the selling momentum here. But there is a caveat to that selling momentum, which I explained. I said if price continue to go to the downside as expected, but as soon as price gets to somewhere around the 89.50 level, somewhere around here, which we have a confluence with the bearish trend line and the bullish trend line, we want to be moving our stop loss to break even or lock in some profit at that point in time, because we never can tell this level could actually be a support level for bullish momentum. So even though we have our take profit target at the $85 area, we should be mindful of what is going to be happening around this area between the 89.5, 88.5 area to see how price is going to relate with that level. So once price gets to this zone, we want to move our stop loss to break even or lock in some profit at that point in time. So that is what I explained. I hope I made myself clear, Shitaka. Okay, chatters, someone will attend to you on that. All right. So, in the absence of no other question, okay, Kami-san, good morning. In the absence of no other question, can we move on to the next pair? 685 Tech 100. Okay, we are going to be looking at Tech 100. That's the next pair we'll be looking at. So on the US Tech, we have been enjoying that bearish momentum. It has been going since last week, and we've been enjoying that right from the $13,500 level. So let's see what is going to be happening today. Well, hold on a second. Let's see. Let's go back to the daily time frame here. So on the daily time frame, the first thing we observed on the daily time frame is this bearish trend line after we were able to connect the series of lower highs. Remember, we connected the series of lower highs yesterday, and right here we saw our price has been doing a consolidation phase around that area with a reversal pattern that was cited that gave us that signal that we should be going bearish on the US Tech. So since yesterday since last week rather, we've been selling the US Tech, and when we going into yesterday's trading session, we also looked out for selling opportunities on the US Tech. And how did we go about that? So if we scale down to the 4 hours time frame here, we saw consolidation phase around the 13,200 area and the 13,174 area after we took advantage of that bearish move to the downside. However, I told you that if we have a breakdown of this bearish trend line here, hold on a second, the bearish trend line we identify on the daily time frame rather, a breakdown of that level, a retest of that level should give us further confirmation to join the decline, which actually happened. And since then, price has been running with about how many pips right now? We have around over 200, okay, close to 200 pips at this point in time. And we have our take profit target within this area that is between the 12,900 area and the 12,400 area. So we actually hit 12,800 yesterday. So if you are taking your profit yesterday, well, kudos to you. But if you are still in this trade, I'll be suggesting that you move your stop loss to break even, to lock in some profit at this point, probably somewhere at above the 13,000 level. And the reason why I said that is this: if we look left, we can see that we have a structure around here. So with this structure here, we want to be moving our stop loss right above the $13,000 level so that we can protect our position against any sudden pullback at this point. So now that we have moved our stop loss to lock in some profit now that we are heading into the New York session today, what is going to be our plans? Now, to get that in sight, we need to scale down to a much lower time frame, let's say the 1 hour time frame, and let's see what is happening on the 1 hour time frame. So we can see that since the breakdown of the $13,000 level, we can see our price has continued to reject that level. We saw the first rejection here, then price came back down. We saw the rejection of that area. We saw another one here. So one thing I'll be saying here, it is appropriate to sell the US tech at this point again. So with the take profit targets still within the 12,400 and the 12,700 area, so we should have somewhere around here. So that will be dovetailing to at least a minimum of, let's say, 200 to about 500 pips to catch here on the US tech. So I will continue to sell and add more selling position to the US tech at this point in time, as long as price action remains below the $13,000 mark. So for the US tech, the selling momentum still holds. Let's keep our selling momentum going. If you're still in this trade, lock your profits at above the $13,000 level. And if you are not in this trade, it's another opportunity to join the rally, join the decline rather. And if you're still in this trade, another opportunity to add more position to your existing trade on the US tech. So this is the scenario we have here on the US tech. If you have any questions whatsoever, feel free to drop a word or two in the comment section, and let's see if I can be of help. Okay. So I hope chat has got that message. Okay. So let's see if there are any questions whatsoever regarding the US tech so that we can move on to the next pair. 685. Do you have any questions? Okay, in the absence of none, let's move on to the next pair. So the next pair we will be deliberating on is let's see which pair did we take after the XAUS, the US tech? Yes. Okay, we went on to take the AUD USD. Well, on the AUD USD, I have been expecting a bullish momentum on the AUD USD, but unfortunately price continued to oscillate right below the 0.6900 level, and telling me that giving me a sign that the sellers are still very strong at this point in the market. But how did we get to the decision of thinking of a buy opportunity on the AUD USD? So let's scale up to the daily time frame and let's see what is happening on the daily time frame. So on the daily time frame, obviously price action has been on a strong bearish momentum since the beginning of the year, as we were able to connect the series of lower highs to have this resultant bearish trend line. So with the resultant bearish trend line we have here, one interesting thing happened during the course of the end of July stroke early part of this month, where we observed and noticed this breakout retest of this bearish trend line to give us a signal of a possible momentum shift in the future. And the multiple rejection of that level led to a significant breakout of that bearish trend line, which gave us that impulsive move to the upside. So we had a breakout of structure. And from a technical perspective, whenever we cite such signals like this, like a breakout of a main structure, one thing we want to be looking forward to is a retest of that structure to give us further confirmation to join the rally. So right now we have a scenario where price is back into that bearish trend line area at this point, and because it's back within that bearish trend line, we were actually looking forward to reversal patterns around this point that will support a trend continuation to the upside. So that's the scenario we're actually looking forward to when we are planning for this week. Then we scale down to the 4 hours time frame, I guess. Yes, we scale down to the 4 hours time frame, and what we saw on the 4 hours time frame made the bullish bias more significant. If we look at what has been happening since mid-July, we can see how price has consistently respected the 0.68 67 is it 6900 area. We can see how price has been respecting that 0.6900 level. We saw multiple rejection of that level multiple times, and since the beginning of the week, price has been consolidating right around that area, giving us a clue into a possible bullish momentum to come out from that zone. So because of this, we position ourselves in such a way that we want to be taking advantage of that bullish momentum right above the 0.6900 level at this point. So like I told you yesterday, I'm already in this trade. I took that trade yesterday at this point, hoping that price is going to continue to the upside, but unfortunately we can see that price is right back into the demand zone at this point. So I'm still not going to be shaky about this. I'm still looking forward to that bullish momentum from this point. As we can see, we still continue to see multiple rejection of that level. We can see the first one, 1, 2, 3, 4, 5, 6, 7, 8. Now we have another candle run at this point in time, which is about 2 hours 30 minutes old on the 4 hours time frame. So I'm still thinking that the possibility of a bullish momentum is likely to happen at this point. So to be on the safer side here and to make things more easier for us, I was able to identify a key level at the 0.6900 area, where if you are not in this trade at this point in time, then you might want to be waiting for price to do a breakout to give us a signal, which is going to likely come in form of a breakout of that level, after which a retest of that level on a lower time frame gives us further confirmation to join the rally to the upside. So that's the scenario, that's the bullish scenario I'm looking forward to on the AUD USD. Now, if we are going to be having that bullish momentum happen, where will our take profit target be? Well, if we look left, we can see that we have a structure that has been a selling niche in the past, somewhere around the 0.71 and the 0.71500 area. We can see how that area has been a selling niche for participants in the past. So one thing I said I did here is to place my take profit somewhere around that level, because we never can tell what is going to be happening around that point. Price could likely do a reversal pattern from that point, send price crashing to the downside from there, or we could be definitely probably having a breakout of that level where a retest should give us confirmation to join the rally. But we don't know what will happen at that point. So in order not to be too over ambitious on this one, I've placed my take profit target around that area, which will be dovetailing to about close to 200 pips to catch here if price moves accordingly. A caveat is here. If price gets to our 0.700 level here, somewhere around here, we want to move our stop loss to break even, or probably lock in some profit to protect our position against any sudden pullback. So that is my bullish bias on the AUD USD. Now that we have taken that into consideration, we need to look at other possibilities that could happen here on the AUD USD. The other possibility that could happen here is that if we see an outright breakdown of this demand zone, that is, price decides not to respect that demand zone anymore, a level has been holding price action for over a month now, and price breaks down that level, giving us a sign that, okay, I no longer want to respect that level anymore, then what do we do at this point? So definitely, if we see an engulfing candle taking price action out of that area, we want to be taking that move as a signal. Now, what we want to be doing if that happens is to wait for confirmation in the form of a retest of either the demand zone here, the key level here, or probably the bullish trend line we identified here. Then we look out for reversal patterns to join the decline to the downside. So these are the scenarios I'm looking forward to, but I'm still leaning towards a bullish momentum here on the AUD USD after considering this breakout of structure that happened during the later part of June stroke the early days of this month. So let's see how price action is going to play out during the New York session today, and let's see if this demand zone will still hold price action as projected. So if there are any questions here on the AUD USD, feel free to drop a word or two in the comment section to make inquiry in that regard. So I'll be taking the next 10 to 15 seconds to read through the chat to see if there are any questions whatsoever. Okay, Ashitaka is saying 11,000 possible on Friday. 11,000? Where is that? I'm not sure I get that right. Ashitaka, you might want to rephrase your sentence so that I can understand what you're saying. Okay, Nina, all right. Okay. All right. So I think we just have to move on to the next pair at this point. So let's move on to the next pair. So the next pair we deliberated on yesterday is the USD JPY, where we still have price doing a consolidation right within the zone that is between the 13 Japanese yen area. We still have a consolidation phase around this point. So we still this is giving us a clue into the indecision in this market at this point in time. So we still need to be very, very patient on the USD JPY. What we are waiting for here is a signal. We are waiting for a signal. And if you remember vividly what I explained here yesterday, I explained okay, let's scale up to I think the daily time frame, so that I can share with you how we got to where we were yesterday. So on the daily time frame, obviously we have been on a bullish momentum on the USD JPY. It's very obvious after identifying this bullish trend line. And one thing we observed since the beginning of the month was this reversal pattern right on the bullish trend line. We saw the first touch, price came to the neckline here. We saw the second touch, hereby transposing into a double bottom structure, which is a very strong reversal pattern. Now we saw the breakout of the neckline during the later part of last week trading session. We saw the breakout of that neckline, and what we were projecting for this week is a possible move to the downside in the form of a retest of the neckline, which will give us further confirmation to join the rally. So at this point in time, we're still yet to see that possible that expectation of a retracement back into the neckline at the 135 Japanese yen. So when we scale down to a much lower time frame, like let's say the 2 hours time frame, for instance, you can see that as soon as price got into this area here, and since the beginning of the week, we have been seeing the movement of price right between the 136.750 and the 137.500 area. We can see how price has been moving within the zone in the last 24 to 36 hours. And one thing I told you here is that since we are expecting that move to the neckline, we could likely see price do a bearish move, which is going to be a retracement of that breakout of structure, where we'll be looking for that reversal pattern to join the rally to the upside here. So I said, for those who are keen to taking counter trade opportunities, we could be looking forward to a breakdown of the 136.750 level, which will give us a signal that we want to be having a retracement phase. So a breakdown retest of structure will give us confirmation to join the decline. So that's for counter trade opportunity. And for those who like taking short-term trades, this is something that we could be looking forward to. However, for people like me who would like taking long-term positions, well, I will be waiting for price to come back to either the 135 Japanese yen level or do a sharp rejection of this bullish trend line to look for buying opportunity. So I'm still waiting for buying opportunity to come around the zone that is between the 135 Japanese yen area. Then I want to see price come back into this area or probably sharp rejection of this level. Then I look for reversal patterns on lower time frame to join the rally to the upside. So that's what I'm looking forward to. But if you're keen on taking counter trade opportunity, then you could be waiting for that signal to happen in the form of the breakdown of this 136.750 level to join the decline, which is likely going to give a minimum of, let's say, 150 to 200 pips to catch there if price moves as expected. So let's see what's going to be happening here on the USD JPY. So patience is required here. Let's keep our mind open and be patient to look out for these opportunities to unfold. Now, the last scenario that we might be seeing, remember I told you that price has been consolidating within the zone since the beginning of the week. We can see price consolidating within this. If we at any point see an outright breakout, that we see an engulfing candle break out of that structure, then that could be a signal that price is going to the upside. So, and if we see signals like this, remember, we don't get too excited at citing those signals. We want to wait for confirmation, which is going to likely come in form of a retest of that structure to give us that leverage to join the rally to the upside. So let's be on standby on the USD JPY for either of these opportunities so that we don't miss that move when they finally happen. So if you have any questions whatsoever on this one, feel free to ask me in the comment section and I will be willing to be of help. So that's that on the USD JPY. So we moved on to talk about the XAU USD, where we've been enjoying the selling momentum here on the XAU USD. Hold on a second. If we look at the higher time frame on the XAU USD, if we look at the higher time frame here, hold on a second. Let's go to the weekly time frame. So on the weekly time frame, it is obvious that price action has been on a bullish momentum on the XAU USD. But one interesting thing happened during between the month of June and this point in time. We can see that since price got into this area in the month of June, it has been caught up within a supply and demand zone. We saw this touch, price came back, price came there, we saw this touch of this demand zone one more time, price came back into the supply zone here in the month of February, and since then we've been seeing this decline in price action, and price came right back into the demand zone at around the $1,700 level. So price came back to the demand zone again with a sharp rejection during the course of last trading session to give us a possible clue into a bullish momentum. So the first thing that comes to mind at this point is that we want to buy the XAU USD. But it's not every time market works this way. So we need to scale down to a much lower time frame to actually see what is happening. In addition to that, there is this dotted bullish trend line we were able to identify here. Hold on. This dotted black bullish trend line we were able to identify yesterday as well, and you can see that price is right around that level, further confirming a bullish momentum. Now, if we scale down to the 3 hours or 2 hours or 4 hours time frame, let's go to the 4 hours time frame. Okay. If we go to the 4 hours time frame, what we will observe here is that since the month of March, I was able to identify this bearish trend line after connecting the series of lower highs. The first one was here, the first touch in the month of March. We saw the second one month of April, and though it was close but not that area, then we saw this one here in the during the early days of this month. Connecting that low gave us a clue into a bearish momentum, despite the fact we saw a bullish perspective on the higher time frame. And if we scale down to the hourly time frame, we can see that things looks a little bit different as we begin to see bearish momentum taking the day. So now that we identify this bearish trend line on the 4 hours time frame, scaling down to the 1 hour time frame, what do we have? We want to see what has been happening since the beginning of the week. Since the beginning of the week, we can see our price was been consolidating right between this 1750 level and the 1745 level before we saw the outright breakdown of that level and price moves to this point. So after you took that move, and then what I said is that if we are going to, because of this, since the beginning of the week we have been seeing selling momentum, and that gave us that impulsive move to the downside. So what we want to be doing right now is to look for selling opportunities, because the selling momentum from this point appears to be very, very strong after considering that bearish trend line we identified on the 4 hour time frame. So right now we want to look for a retracement back into our golden zone area where we want to be taking advantage of a trend continuation to the downside. So what do we do here now? So with that information right now, we want to be looking forward to selling opportunities right within our golden zone area. So if we take this impulse leg into consideration, that is from here, this is the highest point this week. This is the highest point at $1,750 level, is the highest point price got to this week so far. And we take it right to the lowest point it got this week at around the $1,728 mark. That will serve as our impulse leg. So if we bring out our Fibonacci retracement tool, run it through that impulse leg, and we should aim at our golden zone area as a selling opportunity. So between the 50 and the 70.6% area appears to be an area to be looking for selling opportunity. So let's label this level sell window. We have a sell window here. Let's place it right inside the box. So we have a sell window here right now, and one thing we can see here is this. We saw the first touch of that window. Price came into that touch here during the early hours of today. We saw the first touch, price came down. Then we saw the second touch here. In fact, we saw a shooting star. Price rejected that area sharply, and I'm expecting price to continue to the downside from this area. So I've actually taken advantage of that move right from this point. So I want to see price continue to the downside from here. But the maximum area that we might be looking for selling opportunity is this point at this $1,745 level. So right below this level still seems appropriate to be selling the gold for this week. So let's see how price is going to play out in the next during the New York session today. So we want to continue to see selling momentum right below the $1,745 mark. And then where will our take profit target be? Well, if we bring out the Fibonacci extension tool and run it through the previous impulse leg, we should be aiming between the 127.2 and the 1414 area. So if we do that, we have something like this. So now we should have, so which is already right on the bullish trend line that we identified on the daily time frame. Remember, let me show you weekly time frame. So this is the bullish trend line we identified on the weekly time frame. So we should be looking at that level as our take profit target in the meantime, and that will be dovetailing to how many pips that is. hold on a second, about 2,000 pips, that is, if price continue to move in that direction. So on the gold, we're expecting to be selling this we're expecting to be selling the XAUUSD for this week on the gold, and let's be on standby to catch that move when it finally happens. So that's that on the gold. If you have any questions, feel free to drop a word or two in the comment section, and let's okay. So let's take one more pair for the day. So I want us to take one more pair for today. Okay, so let's look at Euro USD. Let's look at Euro USD. The Euro USD has been bearish since the beginning of the year, and I was able to identify this bearish trend line on the Euro USD. We can see how price wrapped around this bearish trend line since the beginning of the year. You can see price did not move far away from the bearish trend line since the beginning of the year. So we had a breakdown on the month of June. Price did a retest of the key level at 1.03500 and continued to the downside. So now going into this week, how do we take advantage of any selling momentum here on the Euro USD? So the first thing I did here when we moved to the daily time frame is this: to identify the key level at 1.03500 level. And if we look at the structure we have here, we can see that this level at 1.03500 has been a major determinant of price action in the past. We can see how it has been a demand niche in May. In June also, it rejected that level before we finally saw the breakdown of that level during the month of June. We saw an outright breakdown of that level. And what happened afterward? Price went to as far as 0.99500 area. Then we saw a retracement back into that key level, and we saw multiple rejection of that level, and price went to the downside from that area. So now that we have the scenario we just cited here, we can see that price has been uniformly finding lower lows and lower heights. Now, how do we take advantage of this pair during the New York session today? So let's scale down to the 4 hours time frame. And on the 4 hours time frame, I was able to identify this descending channel. We can see on your screen with this red dotted line, we can see how price has continued to respect this descending channel since the beginning of the month. And we saw an outright breakout of this channel during the course of yesterday's trading session, and price appears to be rejecting that. We saw the breakdown of that channel, then price appears to be doing a retest of that channel at this point. So one thing I want to be doing is to be selling at below the, let me share with you, let me show you. So on the 1 hour time frame, okay, 1 hour time frame shows us clearly what I'm talking about here. So we have the descending channel being broken during the last 24 hours. We saw a breakdown, significant breakdown of that descending channel. And from a technical perspective, we expect price to come back and do a retest of that channel to give us confirmation to join the decline to the downside. So one thing I did here to make our job easier during the New York session is to identify a key level that will be guiding our action. So what I did is to, if we look at the structure we have here in the last 24 hours, we can see how price rejected this level multiple times, giving us a clue into the strength of the participants in this market. So the 0.99500 level has been holding price action in the past by the sellers. So anytime price comes into this level, we see sellers selling the euro. So if we look at the structure, we saw the breakdown, retest of that descending channel, then we want to join the decline. So right below the 0.99500 appears to be most appropriate to be selling the Euro USD. Anywhere above the 0.99500 doesn't look it's not appropriate to be selling right below 0.99500. So it's not appropriate to be selling, to be buying anywhere above the 0.99500 area. So I'll be suggesting at this point, if you are not in this trade already, you might want to take it right now. It's okay to take a selling opportunity on the Euro USD right now, and the reason why that is simply because we have it right under the 0.99500, and you could have your stop loss right above that level to protect your position. So at this point, where will our take profit target be? Well, if we look at this this impulse leg here, we saw this impulsive move from this that started during the New York session yesterday to the downside. So what I did was to use my Fibonacci extension tool to run through that impulse leg. Where's my Fibonacci extension tool? Then we aim at the 127.2 and the 1414 area, which falls around the 0.98600 area, which will be giving us about 73 pips to catch here. So we have around 73 pips to catch here. So if you are not in this trade, you can actually enter here, or enter here be most appropriate. So let's see how price action plays from here. Put your stop loss right above the 0.99500. I personally am already in this trade, and let's see what happens. So the other scenario is if we have a breakout of that level, if anything happens, that price takes us out of this position we have right now, and we see a breakout of that level, then we might be looking for another setting of momentum right at this resistant level of the descending channel to take advantage of another opportunity to sell the Euro USD. So let's see how price action plays out from here. So at this point, I think this is the last pair we'll be taking for today. If you have any question whatsoever, feel free to drop a word or two in the comment section, and let us look at this together. And you can drop a comment in the section. Let's quickly do a recap of what we talked about so far. So since the beginning of this session, we attended to about 6 to 7 pairs, and let's quickly look at them one by one. On the US oil, the first pair we deliberated on today, I shared with you two scenarios here. We want to see how price is going to relate with the $92 level. Let me show you where that level is on the daily time frame. Okay, so on the daily time frame, we identify this level here. We identify this level at the $92 level. So we want to see how price action will relate with that level. Are we going to be having a breakout of that level? If we have a breakout, a retest of structure should give us a confirmation to join the rally. And then the other scenario is that, are we going to be having a reversal pattern right under that level? That is, price gives us a double top structure. It could be a head and shoulder pattern, whatever it is, right below that level. Then a breakdown retest of structure on lower time frame should give us confirmation to sell the US oil. Now, if we are selling the US oil, our take profit target should be at around the $86-$85 level, which is the key level we identified on the higher time frame. And there is a caveat to this. If price comes into between the 89.5 and the 88.5 area, somewhere around here, we want to lock in some profit because we don't know how price is going to relate with this level, because there is a likelihood, because of the possible bullish momentum that is very, very likely on the US oil, price could reject that level and push to the upside from that point. So one thing we want to be doing, if we are selling after the site of a reversal pattern under this $92 level, please ensure you move your stop loss to break even or lock in some profit at this point. Now, the other scenario is that if we have a breakout of the $92 level, an outright breakout of that level, then that should give me a signal that we are going bullish. Then if we have that happen, a retest on the lower time frame should give us confirmation to join the rally. Now, if we are going to be buying the US oil, where will our take profit target be? For the US oil, I said this, that if we are going to be buying, our take profit target should be between the 104 area and the $116 area. And this is actually the golden zone of the retracement phase of this impulse leg to the downside. So we have between the 50 and the 78.6% as our take profit target zone, which will be dovetailing to about a minimum of, let's say, 1,200 pips and a maximum of over 200 pips to catch here. So the key level at $92 level is very, very important at this point. A breakout of this level should give us a confirmation to join the rally. Now we moved on to the US tech, where we've been enjoying the selling momentum since the beginning. Since last week we've been enjoying the selling momentum, and this week so far we have been profitable on the US tech as we were able to take advantage of this move right from this area down to this point. Now, the first thing I said here is that for those who took advantage of that move, the first thing you want to be doing right now is to move your stop loss to right above the $13,000 mark. Somewhere around here, we want to move our stop loss to that area to protect our position against any sudden pull-ups that could probably happen. And I also make mention that below this $13,000 area is appropriate to be selling the US tech. So we already have a breakdown of the $13,000 level. We saw the breakdown of the $13,000 level here. Price broke down. We saw the second rejection of that level. Then you want to be selling the US tech at this point with your stop loss right above or around the $13,000 mark. Now, if we are selling there, where will our take profit target be? Remember, I shared with you on the higher time frame the maximum zone for our take profit target zone. That's on the daily time frame. We have between the 12,900 area and the 12,400 area as our take profit target zone. So you could choose anywhere around that area for your take profit target. Personally, for me, I actually chose 12,700, which is the max point for me at this point. And if I continue to see structure that supports price moving further down, then I will be extending my take profit target further to the downside on this one. So joining the decline from here, very, very appropriate at this point. As long as price remains right below the $13,000 level, it's good for us to be selling the US tech. Then we moved on to talk about the AUD USD, where I told you I'm still expecting that bullish momentum to happen, though I'm still in this trade but in a loss on this one. And the 0.6900 level is the key level we want to be using to guide our action during the New York session today. So for those who are not in this trade, what I said is that let's wait for price action to break above the 0.6900 level. A retest of structure should give us a confirmation to join the rally. Now, if we take a look at what is happening on the higher time frame here, we can see that we actually on a strong bearish momentum, but the breakouts that happened during the early days of this week, that breakout of structure that happened that took price out of this main bearish trend line is a signal for us. Then we want to look for price to come back and do a retest of that trend line to give us further confirmation to join the rally. So that is why we are thinking of a bullish momentum here. And in addition to that, we have a demand zone right around the 0.6900 level, which has been holding price supported in the past. We can see how this level where buyers have gathered here multiple times in the past to push price to the upside from this point. And right now, price is oscillating right within that level. So because of this, I'm looking forward to taking advantage of a buying opportunity from this point. So to make things easier for us, I was able to identify the 0.6900 level as a yardstick as we head into the New York session. So one thing we want to be looking forward to here is a breakout of this level, a retest of this level on lower time frame, then we could take advantage of that move to the upside. Then we went on to deliberate on the USD JPY, where we identified a reversal pattern on the daily time frame that supports a trend continuation to the upside. And if we look at the structure we have here on the USD JPY, we can see that price has been on a very strong bullish momentum since the beginning of the year, after which we saw a reversal pattern right on the bullish trend line. Here we saw this double bottom structure on this bullish trend line during the course of last trading session, after which we saw the breakout of the neckline, hereby confirming that this is a very strong reversal pattern. So one thing I said we were looking forward to for this week is price to come back and do a retest of this neckline, or probably this bullish trend line. Then we'll be looking for a reversal pattern to join the rally to the upside. So when we scale down to the lower time frame here, since we are waiting for price to do a retest of the neckline, I said there is a possibility that we could be seeing bearish momentum with the intention of testing the key level at 135 Japanese yen, where we said we are looking for that move to the upside. So what I said here is that especially those people who take short-term trades or who take what's it called, counter trend opportunities, we can be looking forward to a breakdown of the structure to take advantage of that. So if we see a breakdown of the structure, breakdown, retests, then we could join the decline to the downside. That's a counter trend opportunity to this area. But if you're a long-term trader, you might want to wait for price to come into this 135 area, after which we want to be looking for buying opportunities to push price to the upside. Then I also mentioned that if we see an outright breakout of the zone, we can see since the beginning of the week, price has been oscillating right between the 137.500 area and the 136.800 level. We can see how it has been oscillating right between that area. So one thing I've been saying here is that if we see an outright breakout of that level, then that is going to be giving us a signal that price does not want to come back to the 135. Then we will be looking forward to a retest of that level to give us confirmation to join the rally to the upside. So that's that on the USD JPY. Then the last one we deliberated on was the Euro USD, where I'm still expecting that bearish momentum to happen, and I identified this descending channel that was broken during the course of yesterday. We saw it break down that descending channel here, and we saw multiple rejection of the 0.99500, giving us a clue into the strength of the sellers at this juncture in this market. So what I did here is to identify that level to make our job easier during the New York session today. So right below this level is appropriate for any selling opportunity on the Euro USD. So as long as price continues to oscillate right below the 0.99500 level, we want to be selling the Euro USD. So where will our take profit target be? I have identified between the 0.98500 max as an area we want to be taking profit for this trend continuation to the downside. So let's if you're not in this trade, at this point it looks okay to enter this trade at this point with your stop loss right below the 0.99500 area. And one thing I also want to state here is that if we get stopped out from this trade, that is price goes as far as taking us out at our stop loss, then we want to be patient to see how price runs. If price runs to the upside, then if price comes back to our resistance point here, then it's another area we want to be looking for reversal pattern to join the decline to the downside. So these are my scenarios here on the pairs. We're able to take 1 2 3 4 5 6 7 pairs today, which is quite a lot of opportunities lining up for us this New York session. So on this note, I want to call it a day. I appreciate you guys for being around. And one thing I used to say whenever I close is that Don't get too excited at the sight of a signal, as you want to wait for confirmations in the form of a retest of structures before you join whatever momentum you want to take advantage of. So you wait whenever you see a signal like an engulfing candle coming out of a structure. Please be patient to wait for price action to give you confirmations in the form of a retest before you want to join the rally or decline. Thank you very much for being around. I wish you best of luck with the New York session, and hoping to see you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, and let's gather here again to look at the market. On this note, bye bye.